Hello traders, good morning, day, evening. How are you today? Please give me some okay, you can hear me. Good afternoon. Wonderful. So, after very beautiful behavior on the first days of the week, today we can see the market is volatile and aggressive, but zigzagging. A lot of pairs, especially the Japanese pairs. Look at these reactions, guys. One during the same 2 hours. It's pretty crazy. It's very serious zigzags. And normally these conditions mean for such pairs what? Leave it alone. Let it happen. Let it go. Let it do whatever it wants. We trade facts, right? And that's what we have to remember. Such moves, it's 100 pips move. It's pretty crazy. On back and forth, almost twice immediately. Such moves, do you really want to deal with that? Of course not. That means that the big money is getting out and the algorithm money is kicking in and scalping back and forth, confusing everyone. And that's why I show you that the first thing, guys, because I got few messages right on the morning. Vlad, is that time to buy? Well, you know my answer. The buys here could be only gamble. Due to what? Only due to the level. Nothing else. So those who want to gamble, no problem. Those who want to trade facts, such things, such moves like the pound yen, like the euro yen, like the Aussie yen, that's like the CAD yen, back and forth immediately. It's pretty crazy. That's not facts. That's just volatility due to exit of the very big money that was controlling the move, starting the exit of the money that it was controlling the move, and slowly moving that to the hands of algorithms. So be careful on such pairs. When your big cycle is reaching the targets, like our pound yen, right? We were hunting the 146 by the end, which was right here on the morning. Well, missing few pips, but this area was reached. And that place, the big money starts to get out, enjoy their profit. That was a beautiful move that we were involved with right from the convergence. We are talking here about hundreds of points. And that's exactly the place where the big money, well, the money that is not care about the intraday trade, right? Pushing it out. So that's why it's very important to understand what's happening and, well, to act accordingly. Okay, so I wanted to start with that to show you that, guys. Now let's continue. There are several pairs that are on our list, several which we got involved with. So let's start covering them. The first one I want to start is the most relevant one. That's the euro versus the kiwi. As we have been following in the last couple of days, we said we are waiting for the two waves to complete and start to make divergence. And this is exactly what we got here, the bearish divergence, right? This level was cleaned, so that's beautiful triple double, which means we are for the beautiful sell continuation, as we have been talking about for a while now. The last trend line with the divergence. Now, this is a question for you guys. Is this trend line legal? Yes or no? Possible to trade? Yes or no? This breakout of the trend line. Who can tell me, guys? Look on the highs and make a decision. Is that a good trend line to trade the breakout? Yes or no? We went from the 4-hour chart confirmation to the 1-hour chart, squeezing the levels, trying to find the best place. So do we have it, yes or no here? The answer is, of course, no. Beautiful. Why no? Because there is no divergence on these last two highs of the trend line. Where do we have the divergence? On the bigger trend line, right? But the top two highs on this trend line, we have a beautiful divergence there. So is this a good entry, yes or no? Right here. Of course. Why not? Why not? Everything is simply correct. That was the big 4-hour chart. We have the divergence on the 4-hour chart, so we squeeze lower. Why? To improve our risk reward. The 1-hour chart move, this one, gave us 2 false breaks and a divergence. So can we go now and look for the breakouts? Of course. And this is the entry, this is the stop loss. Now you have more than 1-to-1. Stop loss could be moving easily to break even. So we've been following that for a couple of days, and it provided us exactly what we wanted to see. Those of you who went the short here, free yourself of worries, move your stop loss to break even, and enjoy the free ride. Targets for such moves, well, that's according to the cycles, basically. Bottom line. Now, if this is a triple cycle, we can start drawing the extension of this one and aiming 61.8 at least. That's the idea. With a free risk to go, we can only earn more, right? So that's for the Euro Kiwi, the pair that was following and giving us, well, exactly what we expected. So let's see if it can pay more. Now it's in the hands of Mr. Market. All we can do as traders is entering the trade with the best starting point. That's the only thing we have the control over. All the rest we don't. And the best starting point comes exactly on the best confirmations we can complete, right? And we were waiting for these 2 waves to complete after the triple double. We got it. We got a divergence. We go lower. We confirm there. We improve the entry there, and boom, we attack. That's all. Very simple. Next, New Zealandian Canadian, a pair that we are looking for sells as long as this top holds. Now this pair is creating for us. Basically, we enjoyed this first sell. We got out once we got a double bottom, and the divergence against us. That was the first time to get out and look for the retraces. Now the pair is potentially creating us a bearish hidden divergence. So as long as this top is holding, we are looking for possible sells. So it is a bearish hidden divergence forming right now. It is also a correction which goes to 100 right now. And that's a good sign. Now on the 1-hour chart, this is the correction we have. First correction. The second correction we have is right here. The second cycle, sorry. The levels are very beautifully, but we have only one problem with that on this short view. And what is our problem for that? Is we don't have divergence here. The only divergence we do have is between the big highs, and the reason I use this high even though it's smaller than the high on the chart is because we don't have 2 candles rules here. So this is just one move. That's why we can relay this high to this high, because we have no different moves here. So this move represents the same move on the MACD, even though it's different of a few candles. Here we got ourselves divergence developing, but the trend line related to that is only this. So as for now, it's pretty far away, right? Which means it's a bit tricky to go and start looking for trades here, because the stop loss would be pretty big. So what we would be looking here is a possibility for kind of improvement of the trend line. By ideal, create some better divergence for us, get ourselves a trend line breakout, and then, only then, we can start talking about the sells. Meanwhile, what are we doing, guys? We are sitting on the fence, singing songs, waiting for the bearish sun on the New Zealand Canadian come out again. You see? What happens if we start forcing and we say, no, this is the trend line, or this is the trend line, or whatever it is, and we start to force? Well, when you force, normally things go bad. timing is so important. Okay, that's for the New Zealandian Canadian. The next one, pound kiwi. We have been waiting for 2 waves down. Now I have a question for you guys. Do we have 2 waves down here? Yes or no? Is that 2 waves down here with a bullish divergence? Yes or no? I have no, I have no, I have 3 no's. Who else wants to try? 4, 5, 6 no's. Anyone says yes? Or it's only me? I'm just joking. Of course the answer is no. It's one straight move. No 2 candles rule is in play here. Therefore, look what happens, guys. We were looking for 2 waves down and go for the buys, right? We were waiting for the 2 waves. We never got them. Look what happens here. The previous move up crossed in one leg through all the Fibonacci retraces, which means this pair currently becomes neutral, irrelevant. We have nothing we can do with. And there is a good chance that at the end of the day, we are going for the 61.8, which is the bottom of the daily range. I want to remind you quickly, this is our range. So the 61.8 is right on the bottom. And we also have this beautiful cycle here. Right? We have a beautiful magnet zone right there on the same place. There is a very good chance we are heading down there. Who knows, maybe even lower. The lower we go, the better the buys would be later on. So can we start looking for sells right now? Well, technically, yes, because you never got the confirmations for the buys we wanted. This trend line was broken with the bearish divergence, which means, right, game over. Currently, nothing is bullish. The best thing for that would be just to clear the level, this one, get yourself the kind of the continuation with the lower lows, and then you can go and sell rallies, because it does suggest the next lowers, right? You have no divergence against you here, and there is a great chance for this development. So no, there is nothing wrong with go for sell. I would prefer, of course, always clean the level. Clean the level means get the confirmation for us in an ongoing trend, right? Very simple. So that's for the pound kiwi, guys. It was on our list, and it becomes simply irrelevant by crossing down through all the Fibonacci's retraces and by never giving us the sign for the 2 waves retrace and the breakout. Do you see, guys, how much patience is crucial? Because the way it was looking yesterday, and let's admit it, look here, it was like a beautiful potential bullish hidden divergence. So that could, in any kind of condition, look like, wow, we can ride a bullish trend right now. But if you stop for a second and you ask yourself the question before you go and celebrate, is it safe to celebrate? Or does someone putting me something in my drink? Right? And then you go to the 1 hour chart and you figure out that you have no confirmation for your bullish hidden divergence. It's just one straight move down. That's where the suspect comes in, and that's where the smart trading means wait for the confirmation. Wait for the right setup. If you do wait for the right setup, you improve yourself the chances to avoid a bad setup. Next one, Euro versus the Canadian. EuroCAD, as long as it is below the daily low, we can start looking for the sells. Fact, we have 2 waves right now, right here, followed by the bearish divergence. So perfect opportunity for us to start and looking for the sells. Going to the 1 hour chart, we have ourselves the beautiful entry allowing us to trade right here. That's our last divergence on the moving average though, but this is still a divergence, right? So by breaking that, we get ourselves the okay to go and sell. All right. Now, Kostas, you've been asking me about the intraday trade. This is your intraday trade. You got yourself the 4-hour chart, 2 waves entries. You go to the 1-hour chart and confirming it. Why would you go lower? I'm just curious. I'm just curious. You're trying to convince me that this is better risk reward. I know this is better risk reward, but I'm trying to understand the logic. Why? Why? Now, you are trying to play this leg, if I understand correct. Right? Let me ask you the question before we continue. If you want to go lower, then you must have the divergence on here. Do you have it? Yes or no? So why would you go to 15 minutes? That's what I'm trying to figure out. Why would you go to 15 minutes here? You always squeeze lower on the trend lines or the double waves that you have, followed by the divergence. That was the 4-hour chart divergence, this double wave. No problem. Is there divergence? Beautiful. Go to the 1-hour chart. That's your last 1-hour chart double wave, or that's your last double wave, sorry. This one, the big one, that's where you have the divergence. If you want to squeeze this one, no problem. This one have to have a divergence. Otherwise, how can you go to lower time frame? If this one doesn't offer you the end, why and how can you go to lower time frame? How? This one doesn't provide nothing. Do you understand? Guys, do you understand this part? It's really only by reading the conditions correct. You want to go lower by time frames, you can. Yes, it's a bit more aggressive, but you can. But you do that once your current time frame approves you the divergence. That's the idea. How do we know otherwise we can go lower if there is no ending on the last leg? Why would we go lower? We can't. We even have no 2 candles here. Not just the no divergence, even not 2 candles to call it a trend line. It's just one shot. Game over. So in that stage, we don't go lower. If you insist anyway to play more aggressive, so most likely this is what you would do. You go for sell here, and you would protect not here. And then in that place, you would immediately move to your stop loss to break even because you have your 1-to-1 risk reward, and you would knock out on break even. Game over. If you are going lower and trying to do the convergences here, then you are waiting the 2 waves retrace and breakout, which you would most likely don't get because the higher time frame doesn't give you the confirmation. All right, guys. Very important. Fanny, you are very welcome. Do you understand it, guys? That it's all about reading through the steps. This is what I always ask from you. Always ask yourself the same questions I am asking you. Every time frame you are dealing with, on all the confirmations you are looking for, ask yourself, do I have the confirmation? Do I have the filters approved, which is the 2 candles rule mainly, right? The 2 candles rule mainly for us, right? Do I have the setup? Then you go to lower time frame. If the answers are yes, you do the same. You want to squeeze lower, you do the same. And that's how you find yourself the best conditions. And on each of these steps, always ask yourself, do I have signs against me? Yes or no? That's all. That's your roadmap. That's your steps. And through every single time frame that you choose to work with, ask yourself these questions. Okay? Is that clear now, guys? And I hope so. And you see the difference between this one and the Euro Kiwi, for example? This is exactly the difference. 4-hour chart had the divergence here on the Euro Kiwi. 1-hour chart provided better trend line with the divergence by itself. And here, if you would like, well, here, no, also not, because this has no divergence. I was going to say you can go and squeeze it higher, but no, you can't, because this part has no divergence. So game over, you can't. So this is your only possible entry. You can always squeeze lower if you have the confirmation to do that by the part you are looking to refer to, which means the last leg of the cycle. All right, guys, wanted to show you that because I've been asked about it, and it's very important. Kostas, thank you for raising that up. I am sure that this lesson is very important for everyone. Just a reminder, not a real lesson. It's a reminder for the confirmations we are looking for. If we do break this trend line, yes, we have the confirmations. And then, according to your risk management, if this stop loss would be big in terms of risking versus the possible reward, then we are looking for lower time frames retrace and sell continuation or bearish hidden divergence, right? Something like that. Okay, that's the entire idea here, guys, and I hope it makes sense to you. Any questions about it? Now, I have a question for you guys. We are long cat franc as long as this daily low holds, right? That's our basically plan, right? Now, since we set a direction, there was no bullish confirmation for us to go longs, which means two waves retrace. This, we said yesterday, is not a correct breakout because there is no bullish divergence. But now I have a question for you. Is this a correct breakout, yes or no? Who can answer my question? I am looking forward for your reply, please. I have one yes. I have two yes. Akos, the 200 moving average was never a condition for cycles. I am asking in terms of the cycle and the divergences, basically. I have two yeses. I have one no. Who else wants to try, guys? Think about it. Think about it. And let's think about it after that together. I want you to think about it. Why yes, why no? For those who say no, why? And for those who say yes, why? Get yourself the moment, guys, please, and reply my question. No, why? Yes, why? And then I will give you, of course, my own answer. You need more confirmation to go long. No problem, but it doesn't answer the question. Why no? No completed divergence and no higher highs on to other time frames. That's very smart for the conservative. No higher highs on the higher time frames. Indeed. So conservative trading, it cannot be. 100% well answered. Kostas, well done. There is no divergence. I argue that there is divergence. A low could be on the zero level. All divergence could be also on the moving average. And there is the two candles rules because it's applied 1, 2. So the answer, the real answer here is yes, we have a buy reason here. Is that aggressive or conservative? That's a different question. The answer is, of course, it's aggressive. Because the higher time frames really never gave us any higher highs or anything like that. So yes, it's aggressive. But is this correct? The answer is 100% yes. Because as long as the daily low holds, two waves retrace on the 1 hour chart followed by the bullish divergence is an entry opportunity. So the answer is 100% yes. Is that conservative entry? 100% no. Okay, so this is the entry, that's the protection, and that place, especially because it's aggressive, we have immediately to move to break even. Most likely such setups will not pay more than that, than 1-to-1, because it's ultra aggressive, right? And that's where normally the importance of the moving stop loss to break even or cashing out with one-to-one risk reward, this is exactly the place, because of the reason that Costas mentioned. We don't have yet the confirmations for higher highs from the higher time frames, so it's shooting in a aggressive zone yet. Okay, guys, so I wanted to show you this one as well and explain. And do you see the differences between the pairs and the setups? Always the same questions to ask yourself. And if you want, there's a good saying about it. If you want to get the complete answer about the market conditions, ask yourself all the questions. Okay? Very important. If you skip one question, you get not complete answer. Great. So that's about this pair as well. Dollar franc cleared the levels we wanted. Congratulations, dollar franc, well done. And now we're legally can start looking for the sells. Very simple. For that to happen, this is the last two waves we have. That's the divergence we have. And on the 1 hour chart, we have no better two waves nowhere with divergences. So the only way for us is the bigger view. Most likely the stop loss in that case, if it breaks, would be pretty big. 100 points, 1 hour chart, very big. So in that case, what we do, lower time frames, two waves retrace and breakout, or bearish hidden divergence, and we got ourselves a continuation. Hi Mohammed, good to see you. Okay guys, so that's very, very important here. Meanwhile, as long as it didn't happen, dollar franc still continues on the way up. Acceptable levels, quick reminder, the 38.2 up to 50. All that is acceptable, are acceptable levels for us. Is that head and shoulders? I assume this is the one we're asking about here. Yes, technically yes. I can't say I'm crazy about such patterns, but for me it's more like a diamond pattern, not head and shoulders. Normal, that's much better angles and much more correct from my point of view. I might be wrong. Okay, I'm not a big master of patterns. I admit I might be wrong. It doesn't change the fact that this rally is coming to the place where we will most likely start looking for the sells. We have a trend line connecting from the highs. We have a bearish hidden divergence here and the bigger one. And we have the 4 hour chart divergence as well. We would be looking to squeeze lower once we have better trend lines. So for those of you who are long, consider to take yourself some short-term cash out. And that was, just a quick reminder, that was the one that we've been talking about, the double bottom, the 61.8 extension, double bottom, and the bullish divergence. That was the last real bullish reason for this pair. And so it's basically all on the 1 hour chart. So those of you again who are long, I think it's pretty smart to start scaling out your profits on the upside. Okay, that's about the dollar franc, which I wanted to show. It's on our list. CAD franc we discussed, euro CAD we discussed, Kiwi CAD discussed. Oh, euro pound. Euro pound, we are waiting for the two waves breakout. Currently we are far away from that, and now it starts to be suspicious. Look where we are starting to locate the prices. The way it looks right now, it's holding the top. So if it will turn to be the fake momentum and it changed immediately, yes, we can start after that going and making this salary trace, because it's also the bearish hidden divergence yet. But it does start to be suspicious. If we drop lower to the 1 hour chart, we can figure out that it is building now the divergence. right? So we still give it a chance, but it has to make it. It has to make the false break. It has to make the breakout. It has to complete now. If it keeps going, game is over. And if it holds above these stops, the answer is very simple. The weekly direction does not change. The only thing that is changed would be this. That we are going slightly higher, and that could be the 089 up to 090 zone. Just a bit deeper correction from the daily cycle before we are for sales again. So don't rush with the euro versus the pound. The double bottom that blocked the triple cycle here holds it. Currently, there is no reason for a sell. The levels are suspicious. The shot to the upside is suspicious. Why would we rush into the sells? For buys, I don't think we have all the confirmations yet. So basically, the bottom line, neutral. Currently, there is nothing to do with the euro pound. We enjoyed the sells a few times. We got a divergence against us. Now it's time to be careful. Why would we do anything else? Australian dollar. Well, the shot down yesterday was pretty beautifully, right? Pretty beautiful. Gave us exactly what we have been waiting for on the bottom side. So you are now in the magnet zone. You have the divergence here. You have the divergence here. 1 hour chart has, does it have a cycle by itself? Yep, it has a cycle by itself. Triple extending, actually. 1, 2, 3. Divergence, I'm not sure we have on the 1 hour chart. No, we don't. We don't have divergence on the ending cycle. So I don't see any reason here to go longs yet. I do see the reason to make money, to take the profits from the cells. Is that divergence on the 4 hour chart? Well, yeah. Moving averages here, and on the last cycle by itself here, you also have the divergence. So if you're in the shorts, I think it's pretty convincing why to make the money. To go long, I don't see any reason, to be honest. Yes, I think it has all the reasons to stop around. This divergence will most likely come into play somewhere soon, but that's all, basically. Okay, few more pairs, guys, on our list. 1 hour chart, potential bearish hidden. Yes, but you are against 4 hour bullish, so it doesn't make too much sense, right? Lower time frames bearish versus higher time frame bullish. I think it's time to enjoy from the profits. Bottom line fact. It did perfectly the down move as wanted, as expected. Game over. Why would we force more right now? Levels reached. Enough. Risk reward reached. Enough, right? Of course, it's only my view. Nimer, pound kiwi we were talking about. Pound kiwi I was talking about before. Oh, sorry. Pound dollar. Pardon. Sorry. Yeah, pound dollar. Okay, so pound dollar we are bearish as well. And we are right on first target. 61.8 and 100. You can see that there are no signs against, no divergence, nothing. Pound dollar should continue lower until it will start to create this divergence. The way it looks, this cycle and this cycle, that's our classical level. Drop to the 1 hour chart and look where it brings you, to the special cycle forming right here. 1, boom, big 2 and 3. So I suspect that this is how it's going to develop. This should be the end, something like that. So maybe some false breaks here, before we switch to the upside. Okay, that's my view here. And again, well, stop loss must be on the break even at least. There's no way to lose money on such write down. The most important thing. Okay, guys? Very important. Okay, now I'm going back to the pairs I have on the list. Pound Aussie. We are bearish. No divergence against us on the 4-hour chart. No reason to end the move. 1-hour chart is a bearish hidden divergence. All the reasons to continue the move. Holds the trend line as well. 15 minutes. Do we have, this is the question for the short-term traders of you, do we have the entry here, guys? Yes or no? I mean, valid entry, of course. Do we have the entry? Yes or no? Again, I remind you, our direction is bearish due to the daily and the 4-hour chart cycles. This is the range of the 4-hour chart. So for us, every sell rally was and remains the plane, which means we have no reasons to stop selling according to the 4-hour chart, and we did not reach the bottom yet. So it is ongoing trend. If it's ongoing trend, we can go and deal with hidden divergences as long as we don't have the divergence against us. This is a beautiful bearish hidden divergence on the 1-hour chart, and the 15 minutes gave you the beautiful trend and the beautiful divergence. So I got only yeses, and the answer is, of course, it's only yes. Simply beautiful combinations. Not even one reason why not to avoid the sells. Sorry, why to avoid the sells, or why not to continue with the sells, right? Daily 4-hour chart, bearish. No divergence against us in terms of ending the move. No bottom of the ranges. No problem. So this is ongoing trend, yes. 1-hour chart bearish hidden divergence. We have the trend continuation perfectly. And in that place, we enter the cells. And here, it could be manually, it could be with the triple B, of course, even though we don't exit here on the 1-hour chart, so we could deal here only with the 15-minute chart to find this entry. It could be with the it could be, of course, with the Scorpios on the lower time frames entries. And of course, it could be with anything else. It could be SRS, could be any system, or it could be manual. As simple as this. Once you have all the confirmations, what kind of strategy you use, you should not be here. As long as you have the right place to apply that. And from this moment, just let the statistics do the job for you. With the strategies or with the manual trading. Only thing we have the control over, guys, and remember that that's the starting point of our trade. And that's the difference between the pro traders and not pro traders, the profitable traders or not profitable traders, the timing, the entries, the starting point, because the knowledge of the charts available for everyone. Charting is easiest part. Euro NOK, wow, no, I'm not a big fan of Euro NOK. I know Jordan is dealing with Euro SEC, and he covered his view on the live room of his. I'm not a big fan of this, to be honest. I am looking to go and invest there, but not a big fan of short-term trading there. The swaps are bad, the conditions are not the best, low volatility pair normally, so low liquidity, sorry, not volatility, low liquidity pair. Not for me, sorry, Nimmer. Not a big fan of that. Okay, the next one, guys, pound versus the Canadian. We want to go lower here, and do we have lower here? Yes or no? Yes. Beautiful. Now it's developing the 1 hour chart triple cycle, the same one that you have been talking about previously, Costas. So not classical conditions of two candles, of course. Basically, the bottom line here, since we have on the lower time frame divergence against us, is let's wait for the retrace or a bearish hidden divergence for the continuation and start looking for the sells. So pound Canadian became bearish as long as this top holds. We were waiting for that patiently. We got the confirmation. We got the okay from Mr. Market. Thank you, Mr. Market. It's time for us to start looking for the setups. So pound CAD becomes bearish, two waves, ranges, or bearish hidden divergence should give us the sell on this ongoing new trend developing. Invalidation, the last high. Suspicious signs, boom, straight leg above all the Fibonacci's retraces, right? If we get that, that's completely suspicious sign. That means, hold on, we have nothing to rush. So, okay, guys. So pound CAD, new one on the list. Finally, it's time to look for a good setup. Don't rush. Remember what I told you yesterday. It's too easy to ruin a good week rather than make it better. Remember that. Very important. Euro Aussie was and remain bearish for us as long as this one is below the range. Do we have any kind of setup currently? The answer is no. No bearish hidden divergence, no two waves, nothing. So basically Euro Aussie not really important for us at this stage. Aussie versus the Kiwi. We want to go for two waves down and sell. Do we have two waves down on the 4-hour chart? No. Do we have two waves down on the 1-hour chart? Followed by divergence? Not yet. Do we have any reason to do anything on terms of longs here for the Aussie Kiwi? Not yet. There is a good chance, by the way, that it's going to complete another clearance for the divergence before we are building up something real big and serious. At this stage, we enjoy the rally from the beginning of the week. We have been involved on these buys up to 108 zone. We got the 108 zone. It turned to be a double cycle from the higher time frame, 1, 2, and that's where the warning sign comes in. You see, guys, how important is the complete read of the way the market is developing. We got the double cycle. We got divergence against us. Get out. Wait for the new opportunity. Did we get a new opportunity? No. And now we are safe because we are not forcing. If we were forcing, we would stay with nothing, right? Okay, next pair. Which one you asked? CAD, pound franc. Pound franc, we are bearish. The only problem with pound franc, this is for aggressive trading only. And why this is for aggressive trading only? Because we are stuck inside. I think, Roberto, I think you were the one to raise it up yesterday. Here, right? We are stuck in these two candles ranges. 1, 2. So we're playing all that inside these candles. So the approach has to be aggressive and aggressive only. But the direction is basically sells. We don't have any divergence against us. Not here, not the higher time frame. The idea is sells. Just keep the risk much lower. Okay. 1-hour chart, bearish hidden divergence provides a good sell. 15 minutes trend line only here. And no divergence. So no action on the euro, on the pound franc. Nothing currently, you see? 1-hour chart bearish hidden, but the 15 minutes have no confirmations. So no action from the pound franc yet. Right? Sarah, dollar CAD, sure. Dollar CAD. What do we have here? No divergence on this high. However, the last two candles rule is here, so we can use the absolute high. Okay, we have this to 129. Oh, I didn't see that. We are almost on 129. Well, you see, pair I did not check, reach almost the level we were talking about, the 129 zone. Great. 1 hour chart. What do we have here? Let's see. Oh, sorry. 1 hour chart. What do we have here? Do we have the two false breaks to go against the daily? One false break. Not two false breaks yet. Wouldn't rush. What we will want to see, because we are against the daily, right? Daily still has the room higher to 130, 131. Remember? So we are neither waiting for the second false break and then lower lows. We can go for short-term sells, or we are looking for triple double. So 1, 2, 3, 1, 2, and then the breakout. If you get that, you have the okays for the sells. Currently, no. Why? Because the daily, first of all, still did not complete the divergence. Second, it has higher levels right here with the duplication. Remember this magnet zone that we were drawing yesterday? So technically, it has all the reasons to go there. And for sells short term, we need two false breaks. Currently, we have only one and no 3 waves down. So would I sell there? No. Do you understand why, Sarah? Basically, by asking ourselves the same question. Are we going with the daily or against? Against. We need the signs to be there. We need the two false breaks with the divergence. Divergence we have, two false breaks we don't have. Boom. Stop. The alternative for the two false breaks, 3 waves down, 2 waves up, breakout. Do we have that? No. Do we have the reason for sell completely? No. Very simple. Okay? So I wouldn't deal with something like that basically has no real confirmations for us. Okay? All right. Commodities, gold and silver. Gold is reaching our level, guys. Congratulations. The only trend currently is valuable and possible for the buys is this one. This is the breakout. We have to go above that to start talking about the buys. On the 1 hour chart, let's see if we can squeeze that. 2 candles on divergence. Well, yeah, on the 1 hour chart, we can actually squeeze that. This view. I can here. We can do that on the 1 hour chart. Daily with us, 2 waves retrace, bullish divergence forming, did not form. 4 hour chart, inner 2 waves with us, with the divergence, with us as well on the 4 hour chart. 1 hour chart, we can squeeze. Yes. So the gold, if we manage to break here, we can start looking for the possible pullbacks to the upside. Yeah, we have the news elections, right, coming. Yeah, it could be effective. It could be effective on all the euro pairs and also on commodities. You know, fear in the market could be different impacts, right? Silver, guys, silver. Where is our silver? Silver, here we are. Silver on the same zone, same thing. We got a double wave, exactly as we wanted. Now it's also blocking the trend line. Bullish divergence forming on a daily chart. 4 hour chart, double cycle by itself. The last trend line on the 4 hour chart is right here. Can we squeeze lower here on the 1 hour chart and get there any action? No. No 2 candles rule, nothing we can do. So the only thing for us is the 4 hour chart trend line, that's all. Oh, hold on, guys. I think. Oh, no, guys. Apologies. We can't do the squeezing to the 1 hour chart here. My bad. We don't have the 2 candles rule and the play on the last leg here. Apologies. This is not divergence. This is not 2 candles rule in play on the gold. We cannot squeeze that. The only trend line that we have is this. Okay, you see that? Exactly what we saw earlier on the EuroCAD. We can't go lower here. We have a beautiful divergence, yes, but we don't have no reasons to call that correct because we have no reasons of the 2 candles rule applied here. Meaning we can't squeeze lower. So the only time frame we are still currently, the only trend line we are looking at is this. If it will improve itself, then we can of course improve the trend line, but currently we don't. So we want to go above this trend line, pullbacks, and we are after buys. Okay, that's per the gold and the silver. The levels are reached. Now we are after setups. Oil. Oil was a monster. Beautiful shoot to the downside in a two waves move here, right to the 161.8. Boom. Bullish hidden divergence. 1 hour chart, bullish divergence by itself. No two candles rule here, so it's kind of tricky. The levels are in play. I would, in that place, move stop loss to break even immediately, and most likely, I'm not in the sell here, but most likely to cash out here partial. It's simply correct thing to do. Wonderful move, big ranges, and if we get a retrace, we can always go and sell again. So the direction did not change. It is bearish as long as we are below the trend line and below the low, below the high. But there is a great zone to make money. Two waves move down, bullish hidden divergence. What else do we need to make positive pips, positive results? Indices. Our DAX was a monster by far, right? And paying us beautifully to the downside. Now, most likely, what could happen? It's not the most likely. It will be affected by the election. So be careful here. The best thing to do here, of course, for those of you who took the money, is get the rally, get a bearish hidden divergence, and continue. That's the best thing and the safest thing to do. What the index currently did is exactly like the gold. It gave us the 161.8 move target right here. Boom. The divergence is developing on this place, so it's a great place to make cash. If we get the retrace with the bearish hidden divergence, we can always go and resell the part that we close. The bottom line, we were undersells, we remain undersell the rallies. For our chart, the divergence holds, and this is an invalidation for the sells. Only if we go above that, we will be looking for neutral, but currently we are sells. What I suspect of, guys, and this is what I want to show you, is this triple double. That's my fear here. This is a bullish hidden divergence. It could turn to be just another leg up before the very big continuation. That's why I think cashing out at least part is a very smart thing to do here. Of course, it's only my view. I might be wrong. Same with the Nasdaq after this triple up, double down, bullish hidden divergence. Too many signs why to make the partial cash out. Same with Dow. 1, 2, 3, 1, 2. Bullish hidden divergence. So yes, of course it can go and do this first. But it's suspicious. And that's why when we have the suspicious, it's better to make some money in the pockets and don't lose. At least don't lose on any way it turns to be. Okay, so we were bearish, we remain bearish. It doesn't change our plan, definitely, because of the higher time frames, right? But this is suspicious, and this is where the importance of making some cash comes into play. Same, of course, with the UK. Same, 1, 2, 3, 1, 2. Bullish hidden divergence. Can we crash? Yes. Can we just do this first of all? Yes. And it will not change the bigger cycle, you see, because we are, for long term, we are bearish as long as this area holds, right? But on the short term, we have the reasons why to make money, why to cash out. And that's the situations where I suggest don't be heroes, be thankful from Mr. Market and make some profits. Very important. S&P is the same. It's exactly the same. Okay? So again, it doesn't change the long-term directions because we are sell as long as this is holding. But when we have signs against us that could develop into two scenarios, my view, and again, it's only my view, guys, is to make money and not trying to prove the market we are right. When we have such a suspicious sign, it's time to make at least partial. Again, only my view. So that's basically all from the industries, and we have now the cryptos. On the cryptos, Dash was one that I was following. I shared with you that also in the Telegram group. This double cycle was the one I was waiting. The trend line was the place I was waiting for. Bullish divergence, we got a breakout and we got paid 1 to 2 right away. So thank you, Dash, for making the move for us. Ripple, here we go. The last trend line was broken, and the last trend line was paying again. Unchanged, basically unchanged, guys. Our view was and remains the same. 2 waves down, buy. 2 waves down, buy. Breakouts. As long as the higher time frame lows hold. That's all. My view was and remains exactly the same. I said it many times. This one is on the list. This one was I'm waiting for the breakout. As you know, I want to go here and make sure it's breaking and holding. And then on the 1 hour chart, well, we needed to make 2 waves retrace and buy. Currently it's zigzagging, so no entries yet. And this one, I keep reminding you that, but you have to remember it already. I would like to see here, this is the Ethereum versus the Bitcoin. I want to see the clearance, and then I want to see the trend line. If we have that, that could turn to be a monster. I might be wrong, but this is one of the better opportunities forming, of course. And the rest, I'm not going to cover all of them because they basically all are doing the same. 2 waves retraces, 2 waves down, breakout, 2 waves down, breakout. In that cases, what we are looking to hunt is always the momentum. Don't overexpose yourself to all. Go with those that provide you the best risk reward, of course. That's all. Guys, thank you very much for attending here. That was a pretty beautiful week from Mr. Market. Provided us the moves we wanted to see, gave us exactly what we expected to see on the majority of the instruments. Oh, last one, guys, Facebook, sorry, before I forget. Facebook, we are bearish there, as you know, right? That was our trendline breakout, so basically that's all. The bearish hidden divergence was in play. The 1 hour chart trend line is pretty much the same like the 4 hour chart trend line, so it doesn't improve or change nothing. That's all. We have the 1-to-1, we have the break even. Facebook remains bearish for us, as explained yesterday according to the daily cycles. And the first target would be the bottom right here, around the zone of 170. Okay, for those of you who are shorting it. That's all. That was a pretty wonderful week, guys, from Mr. Market. Thank you very much for attending. I hope you the lessons we experienced, and so the clarifications we got from specific conditions help you and help you get better. Thank you very much for attending and watching the videos if you are watching the recordings, and I wish you a wonderful weekend. Enjoy, rest well. I'll see you the next week. Ciao for now.